Welcome to Talk Tickers, where we break down the earnings calls that really move the markets. Today, we're diving into Pegasystems. That's ticker PEGA. Their latest quarter wasn't just a beat, it was a statement. A sign that their whole strategy is kicking into high gear, and believe me, the market definitely noticed.
And when I say noticed, I mean a nearly 15% rocket ship of a stock surge. We're talking massive volume, pushing it straight to a new 52-week high. So the big question is, what on earth did they say to spark a fire like that?
Well, to put it simply, this wasn't just another good quarter for Pega. This was a full-on breakout. We're talking record results and, more importantly, a huge validation of their entire game plan.
I mean, they didn't just beat analyst expectations, they absolutely demolished them on both revenue and earnings. It confirms all the momentum they've been talking about, and Wall Street reacted instantly, no hesitation.
Okay, so let's get into the numbers that really lit the fuse on this rally. Because the headline figures, they were impressive pretty much everywhere you looked.
Let's start with the bottom line, with profits. Pega dropped a massive earnings surprise on the street, beating the consensus estimate by, get this, over 66%. That's huge.
So what that translates to is a non-GAAP EPS of 30 cents, which just completely blew past the 18 cents everyone was expecting. You know, that kind of outperformance isn't just a fluke. It shows that their business model is really starting to generate serious cash.
And it wasn't just about profits. The top line, the revenue, was just as strong. They came in way ahead of what anyone was projecting, beating by more than 7%.
Yep, revenue for the quarter clocked in at over $381 million. That's a solid 17% jump from last year. But you know what? The really interesting part of this story isn't just what they delivered, it's how they did it.
And that how is all about a single word: blueprint. On the earnings call, management made it crystal clear. Pega Blueprint isn't just some new feature. No, it's their new engine for growth and the absolute core of their unique take on AI.
Now, CEO Alan Treffler made a fascinating point here. He basically drew a line in the sand. He said Pega uses generative AI at design time. So you use it to build incredibly reliable and predictable workflows from the start. He contrasted that with competitors who use AI at runtime, which, can lead to these weird, unpredictable, hallucinated results. And if you're in a highly regulated industry like banking or healthcare, that kind of unpredictability is an absolute deal breaker.
And you can see how this plays out in the real world. Blueprint is actually shortening their sales cycles. It's getting clients up and running way faster. Some are going live in less than 100 days. And it's making it easier to modernize those clunky old legacy systems. The bottom line, it's making Pega easier to buy and way faster to get value from.
And hey, don't just take their word for it. This is a direct quote from Ravi Kumar, the CEO of Cognizant, one of their biggest partners. When a partner of that size says they're blown away, you listen. That kind of buy-in from the ecosystem is a huge catalyst and tells you the strategy is hitting the mark.
So, all this strategic success is great, but how does it actually show up in the financial reports? Well, that Blueprint story is basically lighting a fire under the entire business. The numbers are just firing on all cylinders.
Just take a look at their annual contract value, or ACV. It's probably the most important number for any subscription company. Total ACV grew a very strong 14% year over year. But here's the kicker. Pega Cloud ACV, which is their main focus, accelerated to 27% growth. This is the flywheel spinning faster and faster, a clear, rapid shift to that more profitable recurring cloud revenue.
And what's even better is that they're pairing this awesome growth with some serious financial discipline. I mean, the company generated $347 million in cash from operations so far this year. They bought back almost 9 million of their own shares, and, this is a big one, they remain completely debt-free.
So what this all adds up to is that Pega is showing true Rule of 40 discipline. Now, if you're not familiar with that, it's a benchmark for software companies where your growth rate plus your profit margin is 40% or more. It's basically the gold standard for healthy, efficient growth, and Pega is nailing it.
Okay, so that brings us to the big question. Where does Pega go from here? After listening to this call, looking at the strategy, and seeing the financial execution, here's our official take on what to expect.
All right, here's the bottom line from us. We are initiating coverage on Pega with an outperform rating. We think this blueprint momentum is for real and will keep driving beats. For Q4, we're projecting revenue around $405 million and a non-GAAP EPS of 35 cents, which is a bit ahead of where the street is right now. We see the stock re-rating higher toward a price target of $75 to $80 as the rest of the market catches up to this acceleration story. The key thing to watch? Continued adoption of that Blueprint platform.
So to wrap it all up, Pega's quarter was a true breakout. They've got a unique AI strategy that's clearly driving real impressive financial results. We'll definitely be watching to see if they can keep this fire burning. And of course, please remember, this is not financial advice.